So, sir, for investors in India, what do you think should be the right asset allocation mix when an investor thinks of giving allocation to a fund such as yours, which is into global quantitative trading? What is the right percentage that he should think about? Also, if you could elaborate on what is the current landscape in India for alternates? What kind of alternates are available, and how does 26 Miles Capital position itself in the landscape of alternate space in India?
See, I think it's a very right question. I want to give. So there's no right answer to this. I will say that, but broadly speaking, I think alternate should have at least 30-35% of anybody's portfolio. So what we do, see, let me see this. Roughly, you can divide market into two broad buckets, right? Traditional investment class and alternate investment class. What we do, all absolute returns or credit funds or startup funds comes into alternate place, and rest all comes in traditional investment markets, right? Public markets and sometimes late stage private markets as well, right? So what we believe, the alternate as a category should be at least 30-35% minimum of anybody's portfolio. Can be more, but it should be minimum 30-35%. More so in the current market, because if you look at the current market, right, I think there's a lot of narrative in the market where they say that India GDP will grow at a certain pace, let's say 9-10% pace. So the market will definitely move up, or Indian market cap will definitely move up, right? There's a certain kind of narrative that's happening in the market. My only point on that narrative is, I give you an example. From 2007 to 2026, China nominal GDP growth was closer to 10%. Closer to 10% on a
2017,
2007
2007,
2007 to 2026.
26.
Yeah, China's nominal GDP growth rate is around 10%. It became from a 3 to 4 trillion economy to now I think closer to 20 trillion. From 3 to 4 trillion to 20 trillion economy. Right?
Okay.
That kind of growth China has seen, right? Crazy amount of upliftment in GDP per capita. And that's all in projecting, right? 2047, India will become very big economy, maybe 17-18 trillion. People are projecting that for India as well, right? And I am a firm believer that will happen. India will grow at 9-10% nominal GDP over a period of next 20 years. Even I believe in that. But to give you perspective, China market from 2007 to current is down 33%. In a 19-year period, point to point, in an environment where the economy grew a 10% nominal growth rate, the market is down by 30% or more than 30%. Because, as I mentioned before, it's not only about good quality company, it's about price. It's about price. 2007, China was crazy expensive. And next 19 years after that, just prove that. And no kind of growth. And I give you another example, right? People keep lose multiplier, GDP इतनी होती है तो market cap इतना होता है. Some GDP market cap multiplier. उस पे भी I will give you a point. In last 18 months, I think around 18 months, Nifty is closer to flat or slightly negative, right? India GDP has moved. Indian market cap also has moved. So Indian market cap is not flat. Indian market cap is up 15%, closer to what GDP has done. But Nifty is where it was. Because at a certain price, a lot of fresh supply of equity comes in the market, right? A lot of IPOs are happening in the market. Last 18 months, I think it's close to 150 IPOs. I think closer to more than 2 lakh crore of money being taken out of the market through this issuance. Because most of them were offer for sale. They were not actually new money going to the company, right? 2 lakh crore of money taken out. So if you see that at a certain price, a lot of supply comes. And that means market cap will keep moving because of this new issuance, because a lot of innovation will happen in private markets. When this GDP growth will happen, those companies will come to the public market, so market cap will go up, but your portfolio will not go up. So it's not the market cap went up by 15% means your portfolio went up by 50%. No, your portfolio might be negative. मार्केट कैप तो बढ़ गया, उसने आपको बोला था मैनेजर ने कि सर जीडीपी बढ़ेगी, बढ़ गई, मार्केट कैप बढ़ेगा, बढ़ गया, पर पोर्टफोलियो नहीं बढ़ा। बिकॉज पोर्टफोलियो तब बढ़ेगा जो कंपनी आपने बाय करी है वो आउट परफॉर्म करेगी। बट व्हेन कंपनीज go this kind of growth rate that India is expecting or what China is expected, invariably what happens that lot of disruption happens. Lot of listed names, lot of previous large names, they stay where they are or sometimes become smaller and newer names comes. So give you another example. Citibank was the largest bank in the world in 2005. Citibank market cap today is lower than what it was in 2005 when US market, if I'm not wrong, is 6 to 7 times up from that level. Nobody knew the name of Nvidia, right? Last 5 years only. So Nvidia is now $4 trillion. So a lot of names that might add to Indian market cap are not even there. You might not even buy them. You are not buying them. So you're not buying them. Or what as we've seen a lot of times, especially in Indian markets, like a lot of companies come to listing when they max out their growth rates. They come, all their growth happens when they were private, and when their growth becomes slower, they become public, right? So you need to be very mindful of these things. It's not like GDP बढ़ गई और market cap भी बढ़ गया तो मेरा portfolio भी बढ़ेगा, वो सच नहीं। And especially that's the reason that we became available for a wider audience. We were making our money happily serving few institutional clients. It's easier, you're getting much larger check size, easier to manage them because you can always provide them customized services. But we felt deeply inside that this is not right. This is not right. An average investor in India who have sizable portfolios should have a lot of alternate exposures in their portfolio. And in alternates, broadly, market divides alternates into two parts: low risk, high risk. Low risk are like people say, FD से थोड़ी सी ज़्यादा risk, FD से double से ज़्यादा return. That one kind of alternates a lot of offer market. Second is equity market से कम risk और equity market से ज़्यादा return. We broadly currently serving that segment. We want to serve this segment as well. But again, in alternates as well, there's one thing that again missing in Indian market, which is there in all developed markets, is liquid alternatives. A lot of alternative investments in India are very illiquid. They tell you to lock your money for 5 years. They put you in a closed-ended fund. We run an open-ended fund with weekly NAVs, weekly redemptions. Because we know that for any product, even for us, you need to have a patience, right? I'm not saying that or is a like quick money thing. Even for an investment who's investing in our fund, it needs time. It need to be patient. It need to might see a couple of drawdown cycles is here as well, right? But we are liquid in the sense if you need money tomorrow, if you have some emergency, if you need money to buy a house or any other opportunity coming in front of you and you want to take care of that opportunity through your money, we will not say that, okay, sorry, we can't give you money. Or we'll say that because you lost money because you took out money. That's not the game that we are trying to play. What the game we are trying to play is market is full of opportunity. If you build the right kind of technology, if you build the right kind of talent, you can keep finding those opportunities. Though there will be times when we lose money, but they will lesser and we will try to be more consistent. In my career, I've never seen a negative year. And there's crazy amount of investment we do every year in our research, in our data buying, in our technology build-up, that we should not have any negative year for our clients. Our clients should not become poorer what they were a year before. That's a very, very critical goal to our mission. And we want to make sure that a client can take out money anytime he wants. I'm not saying, obviously I want certain patience, but his patience should not be at the expense of he needs money and I'm telling him you cannot take it. So a lot of alternatives in India are illiquid. So we want to provide liquid alternatives. Currently we are serving a lower risk than equity but higher return than equity segment. Tomorrow we will love to serve people who want much lower risk but returns higher than FD. We have product for that, but we'll take some time to launch them because we want to make sure that whatever experience we provide is a superior quality. And that's where we are building right now. And when you say that in terms of when anybody invests in a company, it's very simple. We spent a lot of time, last 12 months, have gone into making sure that we have the right pipeline. So if anyone invests, he can just get a dollar NAV. It's simple. You will get your returns in dollars. We'll take care of everything. Hong Kong जाना है पैसा, या US जाना है पैसा, ब्राजील जाना है, यूरोप जाना है, इंडिया में आना है, कहीं भी इन्वेस्ट होना है आपका पैसा, कोई भी करेंसी की रिस्क आती है, किस भी तरीके से अपॉर्चुनिटी को ट्रैक करके पैसा कहीं ले आना है. We build a pipeline for that. That we spend a lot of time in doing that as well, so that money moves seamlessly as per the opportunity or models or machines is seen in any market. You get a simple dollar NAV every week. You look at it. You feel it's in the right direction. It's what we promised you at the beginning of the journey, and that's we can try to keep it very simple. All the complexity at our level, and just simple weekly dollar-based NAV for the investor. That's how we want to operate.